Have the opportunity introducing the next panel. Our next panel is going to discuss a very interesting subject. They're going to talk about GenZs and their investing attitudes. So we'll hear things like social media, cryptocurrencies, FOMO, fear of missing out, and the influences families have on investments. And our moderator for this session is going to be George Jato, Otim. George is a corporate finance professional with over 10 years of experience in this field. He heads the corporate finance function at Video East Africa. And he's also a management accounting lecturer at Matt Abacus under the ICEA curriculum. George has an extensive CV that I will not delve into because our time is fast spent, but I would like us to welcome George to the stage. Thank you.
Good morning, ladies and gentlemen. Some energy, just from a tea break, please. Just as Julie, my colleague, whom I serve with on the CFA East Africa board, mentioned, I'm here to moderate a panel with colleagues of mine that I'll introduce briefly, but for now I'd like to take this opportunity to introduce the topic. We'll be covering GenZs and their investment attitudes towards social media, cryptocurrencies, the fear of missing out, and family. And by show of hands, does anyone know the definition of a Gen Z, or do you reckon to fall within that age bracket? How many? I only see one at the back, yeah? So a Gen Z is someone who's born within the mid 1990s to the 2000s. And like I said, I don't think there's anyone who falls within that age bracket. I miss out narrowly. But nonetheless, I think we have all been through those age brackets before, and I'll give you my brief introduction to investing. I think if you look at the ages 18 to 25, I finished my A-levels when I was 18, and my first experience of investing was actually sports betting. That's when sports betting was introduced in this market, and there were quite a number of merchants or vendors who you could approach and predict on what's going to actually happen in those games. But for sure, I didn't have a good record. And there is a book called Eat the Rich by P.J. O'Rourke, and it goes on to define gambling as, I quote, "Everyone knows that gambling is an immoral act and thoughtless activity engaged in by fools and derelicts." So I guess I was a fool at that time. So nonetheless, after that, I also managed to study ICEA, and then I was lucky enough to get a job by the age 20, and had some experience in investing on the Uganda Securities Exchange. I think that's where I started off my journey, and my first investment was New Vision. That didn't turn out well. I think it had gone to the price of about 1,000 shillings per share. My bet was that heading in towards the heading into the election, the price my expectation is that the price was going to double then, but guess what? It didn't happen, so I lost money. And right now, the price stands at about $153 per share. So generally, investing is risk, and everything is a possibility. So with that short story, I would like to go ahead and welcome the panelists. I'll start off with Josephine Nakitende, the financial accountant at NSSF. So I'll give her a chance also to introduce herself. We have Cindy Kukunda, the investment manager at ICEA. And lastly, Charles Omol, an investment manager at GenAfrica.
Thank you, George, for that brief introduction. As you have rightly stated, my name is Nakitende Josephine. I am a financial accountant at NSSF. I am also an ACCA and CFA charter holder, so I know my numbers. But before we delve into the topic, I just wanted to speak a bit about what NSSF does in the space of private equity. NSSF, because most of my colleagues who have been up here have been saying that we should provide funding, and we do welcome collaboration, but NSSF is the only pension fund in East Africa which has actually gone a step further in providing funding to so many private entities. And we do this through a program called High Innovator Program. It's a collaboration with NSSF and MasterCard Foundation, and we do this through our implementing partner, Outbox. My colleagues are there seated at the table. But what we majorly do in this space is basically to train, provide funding, and also ensure that they are realized jobs from these platforms. So in that space, we have provided over 30,000 training to so many young people. We have funded over 340 businesses and provided over 170 jobs. So I just wanted to sneak that in there. I know the topic is not related to that, but I just wanted to sneak that in there for you to know, and we welcome any partners that would like to work with us. Thank you.
Thank you, Josephine. So we'll dive straight into it, and given that you're the first speaker, I would like you to address a question in relation to social media. So how do you think that social media has influenced the financial education of the GenZs in this market in particular?
Thank you. So if I was to look at that topic and to look at what it is, we all understand GenZs, the generation that has grown up with a mobile phone in their hands. And as Alan said, I know this topic is going to be very exciting for most of us here, because he said it's a very young audience. So I hope we can take some notes after this. But that generation basically has grown up with a mobile phone in their hands, and through that, they've actually been exposed to a lot. They've had a lot of exposure, and studies have shown that the exposure has become related to investing towards around after COVID-19, where most of us were spending loads of time on our phones. So after COVID-19, around 2021, we saw a lot of investment coming from the GenZs. And in Uganda, if you could say, I know so many Ugandans, young Ugandans have delved into forex trading. I don't know if sports betting is investing, but it's still as a result of social media. So on the good side, social media has actually opened up so many of our young people's eyes. It has given them exposure. it has given them information that they would otherwise not have. And through following their influencers who talk about these platforms and these stocks and these different asset classes, they're able to also actually try out and invest in them. So on the upside, I would believe it has actually influenced them positively, because our education curriculum doesn't really provide a lot of financial literacy and financial education. So it's a good thing. Although on the flip side, it has actually not been regulated. It's not regulated. Anyone can become a fan influencer. And studies have shown that most of them don't even have a degree, but they'll go ahead to provide things like courses. So, so many GenZs have been exposed to scams. They have lost their money, and when a influencer goes ahead and tells them about an investment, they will not disclose that they are being paid to actually push this particular asset that they are pushing. So there are risks to that, and I think it's an opportunity for us as young financial advisors to actually go ahead and get on these platforms, because we ascribe to a higher level of standards, and we will be able to provide more viable information to them. So, yeah, thank you.
Thank you. And just as you mentioned, is that through social media, the GenZs are exposed to various asset classes. And I think one of them is cryptocurrencies, which is also considered to be an alternative investment for some of the international institutions and also institutions within the country. With that said, I would like to ask Charles here, and what do you think drives the interests of the GenZs in investing in cryptocurrencies? And do you reckon that the risk appetite is also considered when they are making these decisions?
Thank you, George. Some of the key drivers, at least I have seen, have come from social media. We noticed that during the lockdown period, there were a lot of, when people were at home, people were stuck at home. In some countries, we have a lot of fiscal stimulus. There was a lot of money in the economy. People had, with nothing much to do, started to develop an interest in investing. And crypto was one of those markets that greatly benefited. On top of that, there's so many platforms that have opened up. You know them. You have Binance, you have things that are now defunct like FTX. Even the more established brokers like Interactive Brokers have also increased access to trade and participate in this particular asset class. So awash with all these opportunities and a bit of cash and social media influence, like Josephine mentioned, GenZs have started to go in big numbers. GenZs being a young demographic, are also influenced a lot by short-term, I'd say, financial goals. Things like someone wants to make some money to be able to travel in the next year or so, or to have some supplementary income, because usually at that age, salaries are low if you have a job. So with that in mind, it also causes them to have an abnormally high risk appetite, in my point of view.
Do you think the returns are commensurate with the risk in relation to crypto?
The risk return sort of interaction with crypto. My personal view is I don't feel it is appropriate for most people, most investors, most GenZs, because it's sometimes quite asymmetric, depending on what vehicles are chosen, what particular cryptos, where they invest, which platform is used. all those factors come into play. Maybe I'd like to highlight something like the fact that crypto is often unregulated. So going in, you know you don't have someone watching your back. There's no government entity that will provide recourse if something goes wrong. We have seen a number of meltdowns over the years. I think the biggest recent one was the demise of FTX platform. But even before that, a number of crypto exchanges either have been hacked or there is fraud within, and your investment disappears. With that in mind, looking at the characteristics of crypto as an asset, we as financial markets practitioners and professionals, we don't even know what kind of asset it is, if we are being honest. Is it a currency? Is it a commodity? Is it really a store of value, or digital gold as it's often touted? I don't think so, because of all the volatility and all the risks therein. Having said that, and with the view that, okay, this is a speculative asset, and we have all agreed that it should be handled a bit more responsibly, I still believe that it could still have a place in our investment portfolios as individuals, provided we take certain considerations first, chief of which is your risk appetite. To measure risk appetite, there's what they call the sleep test. If you have an investment or an asset and you cannot sleep well at night, get out of it. Just don't bother. Don't look at numbers. Don't look at history, the financial metrics. Leave that stuff. Get something you feel you can handle. In line with that, we need to, if at all you've chosen to go into this asset class, position sizing is extremely important, given how risky it is, from one, the lack of protection and regulation if something goes wrong, and to the nature of the asset itself. Position sizing is extremely important. Do not put your entirety of your net worth into an asset like this. My advice would be, first start with a solid base. That would be the responsible thing to do. Take advantage of the numerous opportunities and assets that we are now lucky to benefit from. Take advantage of traditional assets first. Things like unit trusts, money market funds, fixed income funds. It sounds boring, but someone gives you a return of 13%. You are sleeping the whole year. It's a miracle of finance. We shouldn't take it for granted. Build that foundation and then have some capital you can risk into something riskier like crypto. And for God's sake, don't borrow to invest in an asset like crypto. Crypto being volatile as it is, we've seen drawdowns of even 80%. Making an investment within this space shouldn't mean that if it goes bad, now you have to go back to the village. So appropriate sizing is important, and just be a responsible investor. Start from, I would say, foundation of the traditional asset classes, and then build up from there. Add risk as you go. The advantage with it is you can get in even with smaller amounts of capital, because of something called fractional trading. You can get a piece of a Bitcoin instead of owning the whole thing, and you still benefit from upward movement. But I advocate for responsibility. Thank you.
Thank you, Charles.
And just as you've mentioned, someone should conduct a sleep test in relation to the risk that they're facing. But there's also that concept of the fear of missing out that causes people sleepless nights. So, Cindy, how do you think the fear of missing out FOMO affects the Gen Zs in relation to investing, especially if they are witnessing exponential rises in some of these asset classes like cryptocurrencies?
Thank you. So mainly in regards to FOMO, so we find people fearing to miss out on potential gains and experiences, so they act irrationally. So basically, FOMO is something that's psychological, an impulse. You're just diving into something you haven't done enough research on, you have no risk management strategies for that investment vehicle. So I'll start off with an interesting survey that was done by Deloitte, and it covered 22,000 people. Those are Gen Zs and millennials, and more than half of them were saying that they live paycheck to paycheck. I know most of us here can relate to that, and they find themselves having to take on a second job in order to cover the costs. So such things drive people to act on FOMO, and this affects the investors' decisions significantly. So one of the main ways is they end up holding on to losing positions. They are taking on market risk that they haven't done research on. They're affected by market volatility. They have no regards of understanding exactly what they've invested in. So you find them really exposed to significant losses because of FOMO. And it's also interesting to know that in the UK and both UK and the US, that's where the statistics are. Here in Uganda, not much that I could get, but it shows that most Gen Zs and millennials started investing before the age of 21. So you can look back at where you were before in that age, what you were doing then, whether you knew about these financial assets, but for them it's happening. They are more financial savvy, and they are challenging the norms of traditional ways of making money. There are influencers coming up. Before you know it, they'll start looking for the PE firms to invest in them in order to earn a return. So in a nutshell, it's very key for them to be responsible when they decide to act on FOMO. They need to have a long-term mindset when they decide to follow the bandwagon. Like, where is this going? How does this look for my retirement? Am I just in it for just short-term gains? So with social media, there's a lot of people acting on FOMO and being influenced with the kind of lifestyles they're seeing. And you see a celebrity enjoying themselves in the Bahamas. You do not know how they got there. They might be financing it upon a bank loan. And these are the things that they don't see. So FOMO is real, and the main answer to this is it will lead to less diversified portfolios and exposure to significant losses for the Gen Zs. So I think that's it.
Thank you, Cindy. And then this leads us to the final aspect before we ask the audience for questions. In terms of family, I'll start with you, Charles. How do you think family is still a trusted source of financial advice for the Gen Z?
Yes, I do think family is a trusted source for financial advice for this particular demographic. Studies have shown that in terms of sources of information that they trust, the Gen Zs defer to family before they get to even professionals. So it is a very important source of knowledge, a source of information. Perhaps I would also advocate for the older generations, the millennials and Gen X, Gen Y in the room. For those that have youngsters in your lives, please teach, share experiences and knowledge we are in a world where there's an information overload. And some of the sources of information that the Gen Z generation normally interacts with, social media particularly, is full of misinformation. So it's important for the older generations to come in, share, befriend these guys, and sort of panel beat and allow them to grow into more responsible investors. Another form of support, I guess, could be in terms of some seed investment. If you have a kid maybe who has just finished university, as opposed to a grand graduation party, give that guy some money to do his first investment. Thank you.
Thank you, Charles. Josephine?
Family is actually very important, because if you look at the Gen Zs, they don't have a lot of experience. So they will tend to believe and trust what their elders tell them and what their family tells them. So, which also now, as Charles has alluded, calls to us to have information. And if you have someone younger who wants to invest, they will look up to you. Much as they have like 4 social media accounts and sources where they get information from, most of the time, more likely than not, before they actually put their money in an investment, they will ask someone older than them or someone who's in their family to actually give them advice. So, and they trust that advice because they trust you as a person. So it's quite important, and it's a trusted source for information for them. So we also need to read up and get to know these different, even if crypto is spoken about as a Wild Wild West, as everyone says, you need to arm yourself with information about it, because it may not be all bad and this kid is going to invest in it, but they need to know the risks that come with it. If they're going to do forex trading, studies have shown that people who do forex trading actually fail the sleep test. They usually check their apps at like 27 times in an hour. So at what point do they sleep? So before someone goes into that, and if they have that information, it would be very helpful to them. So yeah, family is quite important, and it's a trusted source.
Thank you, Josephine. Cindy, your thoughts on the topic?
So my thoughts on family is kids really pick up a lot from their parents. I have a toddler and she does exactly what I do. She really looks up to me. So the answer is yes, family is the most trusted source of financial advice, and they're feeding off from the decisions that we make. If you are a father out there with so much debt and you're careless, trust me, that's what they're picking up. So it's important to know that it's family first, and then financial advisors follow closely when it comes to the most trusted source of advice. So the way forward to treat the FOMO is you have to guide them to stick to a budget, not to let this lifestyle creep come in. I mean, you find yourself in a group of, hey, holiday in Bali, just like that. You haven't planned for that. You're just going to panic and try to look for short ends and ways to make quick money so that you can make it to those trips that your lifestyle can't actually afford. You're living beyond your means. So it's always good to stick to the budget, and it's also good to start them off early. Let them start saving early. The earlier the better. And it's good to keep your eyes on the goal. The long-term goal is retirement, not this short-term enjoyment. And then the financial apps is something to encourage. There are so many apps out there that do portfolio simulations, interactive brokers that show you the 10-year average return, the kind of risk you're taking on before the Gen Z actually gets into that investment venture. So yeah, basically that's what I can say on family. We need to be responsible when it comes to acting on social media, and also not to forget the mental impact that it has on the Gen Zs. Some of them find themselves isolating themselves because of the success stories that they're seeing. Someone has made quick money, but they don't know the real truth behind that story. So it's affecting some people mentally, but on the good side, it's boosting confidence for others. It's giving them a sense of belonging, and it's taking them to the next level. So it's important from the family's perspective to really be key on our mental health when it comes to social media and following up on formal. So those are my 2 cents. Thank you.
Thank you. At this point, would like to welcome some questions from the crowd, if there are any. From the audience, sorry.
Yeah.
Thank you, George, and the rest of the panel for an engaging and exciting discussion. You've spoken a lot about, first of all, my name is John Okumu, Director of the Board of the CFA Society East Africa, Director at EY as well. We've spoken a lot about FOMO as pertains to investing, but with Gen Zs, and not just Gen Zs, millennials as well, there's a lot of life FOMO as well. Right? So as someone that identifies as a Gen Z myself, these days it's how you identify. So as someone who identifies as a Gen Z, how can you convince me, right, to save or invest the little money that I get? Maybe it's my first job. I've been working for a couple of years. I see my friends going to Bali, the Bahamas, Zanzibar on holiday, my friends. So this is not FOMO that's far removed, but it's FOMO, my everyday circles. How do you convince me to think long term and invest that money and forgo this trip that I know I'll get likes on Instagram, which obviously will gratify me. I'll feel good for a bit. How do you convince me to hold off on this, invest in a return that might never come, at a period that might never come for me because I might die tomorrow or something? And that's a question for the entire panel.
Thank you. We'll take 2 more questions. There's one here.
Some haters on my table are saying I'm not a Gen Z, but so my name is Campbell Mwesigwa from Absa Bank. I think as Gen Zs, we live in a 30-second time scale. Everything is 30 seconds. Anything more than 30 seconds, you've really lost us. So how are you guys going to fit your financial advice into 30 seconds? Because that is where we are deriving our FOMO from. I know Cristiano Ronaldo is advertising Binance, and 30 seconds is all it takes. So how are you guys addressing us in 30 seconds? Thanks.
So I'll start off with the first question. Oh, there's one more. Okay.
One of the things I've noticed with Gen Z is, they want high returns quickly. How do we encourage them, or what funds can we create for? Is it possible to create a fund where someone can invest, with their little money and take advantage of the alternative investments? Because most of these investments are targeting big funds. They are. How do we get these Gen Zs to invest? Because they want fast returns. If we're talking about 10x return, how can we create vehicles for them so that they can benefit from these alternative investments?
Thank you. Cindy.
Okay, so starting off with those who are tempted to go to Bali when they can't afford and they want quick money. One thing you should know is clean money does not make noise. Like, seriously, it doesn't. So how to address that is you have to have discipline. The word is budget, and don't let the lifestyle creep in. So there's a rule you could follow of 50, 30, 20, where you have 50% going to your essentials, then there's 30% to enjoyment, it's very important, and then maybe 20% is going into investments. So what's key to note here is always plan for those enjoyments. If you're going to Bali, what's your budget? Or are you someone for Bali or you're someone for ginger? Like, know your level, eh? Yes, and sometimes it's also good to buy yourself something to spoil yourself once in a while. When you taste that good life, it drives you to go and look for money. So to avoid them from panicking, the word is budget, and have some money set aside, 10 to 20% in investments, and emphasize on enjoyment and not to breach that. I hope that resonates with you.
Thank you. Josephine, the 30-second question.
Thank you, George. I think this is TikTok. The gentleman over there, you must have a lot of TikTok. But you're right. You are absolutely right. And this calls that for all financial advisors, if you do want to get this generation, the Gen Zs, as your customers, you actually have to have a high social media presence, because that's what they resonate to. They're not going to read your investment papers. They're not going to read your 50-page document that you have spent a lot of time putting together because you know an IPO is coming through. They're not going to read that, but they will watch a 30-second video. And I think if you think about it, MTN actually did it successfully. They really, really pushed their stock when it was coming through, and so many people bought. They made it so easy for people to buy, and social media adverts were going out. They got all the partners that they could use to actually push their IPO before it actually went into the market. So it's doable. If someone can show you how to cook a recipe in 30 seconds, I think I can tell you about a bond in 30 seconds. So it's possible. We just need to start and do it. Thank you.
Thank you, Josephine. I'll let Charles address the question of convincing the Gen Zs to invest in the traditional investment opportunities that offer lower returns compared to the high returns promised by some of these other asset classes.
On the issue of 10x returns, I guess for us as maybe a challenge to us as some of the fund managers in the market, a challenge for us could be to come up with some funds that offer a higher risk exposure, but within the context of professional management. I'll give a couple of examples. We could do some specialist, maybe non-balanced funds. We could start with something as simple as an equity fund, and then have a strategy that is a bit more risk-seeking. That way, someone as uninformed as many people normally are, simply knows, these guys, they have my money, they are the experts, let me put in money and see what happens after a year. The collective investment scheme platform, for me, would be the way to achieve this. I know some discussions are also going on around how to utilize that structure for alternatives. Some heads are being put together, but I think something positive will come out of that. I'll close by saying for the non-Gen Zers in the room, or the older generation, we also need to impart some life skills in the younger generation. Issues such as FOMO and instant gratification is not, they're not problems specific to that younger generation. These are things that affect a number of people throughout life. We know that the fact is that quick returns and quick gains are unsustainable. There's nothing in life like that. So I think the onus is upon us to instill some of these skills as we look for more responsible interventions. Thank you.
Any closing remarks from Cindy, Josephine?
Well, my closing remarks is technology, AI, robotics are here to stay. They're not going anywhere. We'll embrace them and make the most out of them to our advantage. And keep in mind the person that's working for the company that's using AI will replace the company that's not using this AI and these financial options. So being tech savvy is the way to go. It's not going anywhere. We just have to make it work for the Gen Zs and the millennials and the which other Gen is it? Gen Y? Gen X, yes. The very old ones. Yeah. Okay. Apologies, I'm nearly there. So yeah, those are my 2 cents. It's here to stay. Social media is here to stay. Let's embrace it. Let's not fight it. Thank you so much for listening.
My closing remark would be for us to get out of our shells. You know, we like to sit in our suits, in our AC offices, and we're actually not making that much money. There's a lot of money out there. This is a niche that we should take advantage of. These young people are getting into the workforce. They have money. They have goals. If someone wants to go to Bali or to Ginger, as Cindy suggested, you can actually advise them and push them towards that goal, and you have all the knowledge. So don't just sit with it. You can share it. Of course, you have to make sure you don't lose your charter in the process with pumping a certain asset class, but get out of your comfort zone. You can actually do it professionally. I have seen people who do it, and we have customers out there for us. So let's just get out there. Thank you.
Thank you, Josephine. I think we deserve a round of applause. And some gift hampers from the MCs, because we have saved you about 11 minutes of your time. So thank you.